Hello, welcome to European Open Briefing for Friday, November the 16th. I'm Raf Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we've got a somewhat positive risk-on sentiment this morning. The main driver of risk appetite is the easing trade tensions between the US and China. As there's more indication, we're getting more indications that the two sides are trying to find some kind of a breakthrough. However, we do have the heightened Brexit uncertainty that is weighing on sentiment. We're seeing gold prices rise to one-week high on the back of the turmoil, political turmoil in the UK. Sterling fell sharply yesterday, sharply dropping below the 1.28 level. It has now recovered a little bit, about 1.28, up by 0.3%, as Theresa May survives another day. The euro is also extending its gains. It's currently trading around 1.1350. We just had some comments from Mario Draghi, the ECB president, who pretty much stuck to his recent tone, confirming that the ECB will end its asset purchases at the end of the year. But he did say that if the growth does slow down further, the ECB could change the rate path forecasts. But overall, the euro is up on those comments, as well as reports that the Italian Prime Minister, is working with EU officials to avoid possible large fines over the budget, which is breaching EU fiscal rules. If you have a look at what's happening with the dollar index, is down slightly at 96.80 as we see a bit of a rebound in sterling, as well as the euro extending its gains. Against the yen, though, the dollar is down by around 0.3%, mainly due to some risk aversion relating to the Brexit uncertainty. However, the Australian dollar is sticking close to its 1-week high it touched yesterday on the back of strong employment numbers. It is benefiting from those easing trade tensions, and the Kiwi is also kind of benefiting from that as well. The Kiwi did yesterday touch a 3.5-month high. We did rather earlier today touched a 3.5-month high. We did get some stronger than expected manufacturing PMI out of New Zealand. The Kiwi currently trading at around 0.6818. The Canadian dollar also making a bit of a recovery, climbing to a 1-week high as we're seeing oil prices recover a little bit. The loonie currently trading at 1.3151 to the US dollar, up by 0.18% at the moment. Oil prices, WTI up by 1.4%, and gold up by 0.3%. If you look at the main performers, we can see oil making a decent rebound, followed by cable. At the bottom, we've got dollar yen, and we're seeing dollar yen softening this week. Throughout this week, it's now retreated to around 113.25. Dollar index, though, is not too far from its recent 16-month highs. There's support from, of course, for the dollar index from the recent sharp declines in the euro and the pound. Yesterday, we also had some strong US retail sales numbers, but the immediate focus is on the upcoming meeting between President Trump and President Xi at the G20 summit at the end of the month. There were some reports that the US Trade Representative said that further tariffs on China will have been put on hold, but this report was later denied, and we're seeing some other news suggesting that US officials are not expecting any major breakthrough at the G20 meeting. So there's still a bit of uncertainty as to which direction those trade talks will go. Let's now move on to sterling. We can see that big plunge yesterday. It had recovered earlier on the back of the Brexit deal being agreed between the UK and the EU, but then we saw the resignation of the Brexit Secretary Dominic Raab, which did come as a bit unexpected. We also saw several junior ministers resigning as well. It's looking very unlikely that Parliament will support Theresa May's Brexit deal, and there's now a motion by Conservative MPs to trigger a leadership challenge, although as of yet there aren't enough letters to trigger such a vote of no confidence. For the time being, Theresa May is safe, but still a lot of uncertainty. A no-deal Brexit is still, the odds of that are still very high. We could also possibly have a snap election or even a second referendum. So all of that is keeping sterling at around 1.28, having earlier this month recovered to above 1.31. We saw yesterday sterling plunging by 1.8% versus the euro and 1.7% against the dollar. That was the steepest decline since October 2016. And a quick look at the Canadian dollar. We're seeing some signs of life for the loonie. It has been pretty negative 1.5 months for the Canadian currency. Yesterday, the loonie firmed to 1-week high 1.3145 as oil prices started to recover. So there are hopes that OPEC will soon announce output cuts. But of course, we're seeing continued rise in US output as well as US crude stocks, so that is weighing on the market. So it remains to be seen how far oil prices will be able to recover. For the time being, though, the loonie getting a bit of a respite from its recent declines. And looking at what's coming up later in the day, it's going to be fairly quiet. We're going to have some US and Canadian industrial numbers. That's it for me. Thank you very much for watching and have a great day.